Coronation has reported a 45% increase in its assets under management to almost R500 billion. Headline earnings per share were up 110%. Joining us now as we unpack these numbers is Chief Executive Anton Pillay. Well, what a way to have your 20th year, Anton. You've now won the best performing company on the Johannesburg Stock Exchange and you double the profits. I don't think you have to be a genius to say this surely cannot go on indefinitely.
Quite correct, Alex. As we said in the SENS announcement this morning, our business is cyclical. We believe that the alpha that we generate is lumpy. We also believe that from an alpha generation point of view, the outperformance that we generate for our clients, we are at a cyclical high. Our revenues are highly geared to both the market and the alpha that we generate for our clients, and we certainly don't believe that it's sustainable at these levels going forward.
It's an extraordinary story, because if you keep performing in the top quartile as you guys have done, you just get more and more successful. And as you say, the alpha or the excess over the benchmarks is not that big when you look at it in absolute terms, 3.5%. However, over a sustained period of time, it feeds on itself and you get this kind of enormous amount of money that you guys are generating. Well done to you.
Thank you. I mean, it goes to the heart of the company, which is really about investing for the long term. So I think your point is very valid, very accurate, in that the alpha if you look at the graphs on an annualized basis or on an annual basis, you'll see it's quite, it spikes and troughs and peaks. But if you look at over 5 or 10 years, which is really where we aim to outperform, you'll see that 2 or 3% on an annualized basis does ultimately generate the required returns for the clients.
Just to go back to the beginning of this business, Leon Camphor and Tony Gibson, who were at the time at Cyfritz Asset Management, they had a fallout with Cyfritz Asset Management, spoke to Dave Barnes, and here we go, 20 years later, you've got this incredible business. But Leon's big saying, and I remember it so well from those days, he says, there's 2 things you must never do. You must never become arrogant or complacent. With this kind of generation of profits, how do you guard against that today?
We're quite aware of both those pitfalls, and within the business, we try and guard against the arrogance. And in communication with the staff internally, we try and make them aware that we've got to remain humble with respect to what we do on a day-to-day basis, and that without our clients, we ultimately have no business at the end of the day. So we are here to serve the needs of our clients, and I think that has helped to focus the mind when the tendency for arrogance does settle in. But to a large extent, I'd like to believe that we've remained humble in serving the needs of our clients.
Just on the long-term investments that you mentioned, that it will be a tough trading environment, and you've put in certain measures in place to protect you from the turbulence, so to say, that you might experience. Well, what kind of measures are those?
So, I mean, our revenues are highly geared to the market. So you've seen the JSE over the last years generated 27%. Over the last 5 years, it's generated just under 17%. We certainly don't believe that those levels are sustainable levels looking into the future. Our sole focus will be on delivering long-term investment performance through the cycles to our clients. And that's really all we can do at this point in time is work through the noise, which is what we do on a day-to-day basis. The guys value the shares, they look past the noise over the short term and look towards normalized earnings, and then value those shares over the longer term. And ultimately, the goal is to outperform the market.
You've almost become a bit like Alan Gray had to when they got so big, and that's had to take big bets. AstraPac. Coronation decides AstraPac is a turnaround situation. You've got everybody coattailing you and running with AstraPac as well. Is that becoming increasingly part of your business strategy now, to find companies that you can take a big chunk of?
I don't think it's necessarily part of the strategy. I mean, we will, as I said, we will value the companies, and if we believe that they offer value over the long term, we will invest in them. I think successful asset managers do, by and large, attract more flows. If you look at our business model, we've closed about 75% of our institutional business to new clients on the institutional side. On the retail side,
just explain that.
So about at the beginning of last year, we sent out notification to our clients specifically on the equity mandates, balanced mandates and absolute mandates, that we would be closing our institutional portfolios to new clients at the end of December last year.
That means you're not taking in any more money?
We're not taking in any new clients. We will still continue to take money from current clients, but brought from any new clients.
Buffett says size is an anchor to performance. He says if he could go back to the beginning, he would perform far better. You're sitting on nearly R5 trillion worth of assets. Do you think that he has a point?
We want to deliver alpha to our clients, and we believe size does obviously affect our ability to deliver that alpha. As I said, we've shut on the institutional to business and new clients. On the retail side, the flows, we're pulling in about 25% of the industry flows, which is double our current market share almost. So we don't believe that is necessarily sustainable in the future.
Oh my, Alec. Just on your assets under management, that increased by 45% this year, and recently we also saw the surprise acquisition of, or not acquisition, but increase in your stake in Clicks, which came as a rather surprise to the market. With identifying jewels, as you mentioned, that you invest for the long term, how do you go about that? And it seems as though you surprise a lot of people.
Yeah. I mean, we have an internal team of portfolio managers and analysts who basically perform their own internal valuations and their own in-house valuations, and based on those valuations, we have a ranking table where we will rank our internal valuation relative to what the market offers or the share price of that particular stock is, and on the back of that, we will either include it or exclude it from the portfolios.
Just on that, are you looking to increase the number of assets under your management at the moment? They have increased by 45%. Could that go even higher in the next year to come?
We're not asset gatherers by nature. We don't target a particular. So we don't have a target of 700 billion. Now that we're sitting at 492 billion. The main goal is to deliver the alpha to the clients, and to the extent that a particular mandate, the size of the mandate detracts from that ability, we will, as we've done with the institutional business, we will soft close the mandate.
It's a lovely business. As we were saying before, 3.6 billion in revenues coming in. You spend about 1.6 billion, 2 billion rands worth of profits, which you distribute via dividends after paying tax. How many people share in that 1.7 billion of expenses?
The expenditure, it's a range of people. So on the variable side of the expenditure.
How many staff do you have?
We've got 246 staff members.
246 staff. And of the 1.7 billion costs, how much of that is people? I'm trying to find out if my daughter should come knock on the Coronation door.
I think the important thing to look at with respect to that,
answer the question.
To that cost.
What percentage of the cost is people related?
I'd say roughly about half.
Okay, so your people are earning about 800 million a year, between 240. That's a pretty good return. How do you keep them motivated? How do you keep such rich people actually wanting to come to work every day and work hard?
It's very difficult. The way we incentivize people is that the cash portion of their earnings is relatively small. So on average, will make up about 30%, and the rest of it ranges from between 3 to 7 years in terms of remuneration.
It's a good
and that's how we keep them incentivized and motivated.
Anton, keep getting into that top quartile, and then next year you might be the top company on the Sunday Times again.
I just wonder if they have vacancies, Alex. Hey.
We're quite happy working for CNBC. That was Anton Pillay, Chief Executive of Coronation, aren't we, Gugu?